slow and new people are joining, it gets too long.
Okay.
So that's the thing. So let me open it.
There's, you should find the link in the chat screen.
Can you see the screen? So basically, we were discussing that how is Bank of Baroda performing, and then I had also shared one of the list as compared to HDFC Bank. So, I mean, I don't know if anybody else who has read through it and has an idea that how we should progress, or else I just continue with whatever I read.
I think you can start the discussion. To be honest, even I
Okay.
didn't go through all those things. I just walked through it. So maybe
Yes.
we might come across
Hey
some.
Ranjit, you have to be a little louder. Huh?
I think we can share the knowledge each other. You can just start.
Yes. Okay. So the first thing what I understood from the last HDFC from the last HDFC bank discussion was this, that we need to first discuss about, like, we have to check that what is the market cap of this the whichever company that is there.
Mhm.
And for banking stocks, some things which we should be checking is like this net interest margin, that how is it increasing um, year on year or quarterly basis, most likely more year on year. The other thing is that how their deposits and their total deposits, sorry, I'm reading actually. So total their deposits, that their liabilities, if they are increasing or they are decreasing, and also that if they have any assets, or what kind of loans, if they are into retail business or wholesale business. And like Nishant was saying that retail business in India is much better. And now that we have a lot of issue with the NPAs, so the NPA ratio should not be too high for the companies. So these were a few points on which a bank should be.
NPA is below 3 is good, right?
Yes.
I think this question for Nimit. I think Nimit or Kunal. I'm not sure who mentioned this topic. For auditing any bank balance sheet of a bank, which are the items we need to check? Is
It,
someone has
it's
created
me. It's me.
Excel
It's me.
And their
It's me.
capital adequacy ratio, which is mentioned here.
Mhm.
So the capital adequacy ratio will be something which is that how they are raising their capital. It is not it should not be it should not be by um, renting out. I mean, you have certain loans which you can take from from the central government.
Mhm.
So it should not be based on those kind of those kind of from that money, which is from which you are getting your capital adequacy ratio. Okay, so I mean, with this, actually, I would like to ask you that what is your take on Bank of Baroda? If anybody has got a lot of, I mean, how you think about it could be a good way to start with, not just with numbers, but why do any one of you who thinks that Bank of Baroda could be a good buy or a bad buy?
I think Bank of Baroda is one of the nationalized bank in India. I think it's a safe.
Hey guys,
Hey,
guys,
hey,
can you hear me?
Yeah.
yes.
Okay, sorry, I was talking, but I think somehow my voice was not going through. But please continue.
Hey,
I'll
would
come
you
after you.
would you mind everybody, because maybe my voice you can recognize, but I don't recognize anybody else's voice apart from Ranjit.
Can you
Because
recognize
everybody
Sure.
my
is newly
voice?
joining. So if you can tell your name before you're speaking, at least for like some time, and then it would be okay.
Yeah, sure,
Hi,
it makes sense.
I
So yeah,
hope you
this is
can
Nimit.
recognize my voice. This is Kunal.
Hey, hi Kunal. Yeah, continue. Just speak up.
Sure. Can we first
Mic
understand
testing,
who all
mic
are on the
testing.
call? Who all are on the call? We know we have Kunal, we have Nimit, myself means Nimit, we have Ranjit, and who else?
Tell it like this, that Ranjit from Germany, or Kunal from there's a guy from UK. I don't know who he is.
Kunal from London, yeah.
So
That guy is me.
okay. Me nahi, the name.
That guy is
Okay.
me, that's Kunal.
Sandeep is from
Okay.
Paris, I think.
Hey, hi, I'm Sandeep from Paris. You hear me?
Okay. Okay, cool.
Yeah. All right. So we have Sandeep from Paris, Kunal from London, Ranjit from Germany, myself Nimit from Paris again. I think Neha is also in Paris, right?
Yes, correct. Correct. Okay.
Okay. Good.
So that's
Yes.
cool.
I was talking about that. I from this currently screen that you are showing, Neha. I don't know much of things like what is PCR and what is capital adequacy ratio, and there are so many things. But from my perspective on the Bank of Baroda, since it's a government nationalized bank, it comes under the blue chip category, and currently the rates are pretty low. And in my opinion, if you are looking from a long term perspective, it should give you profits. That's for sure, because it's a nationalized bank, and looking at the current finance ministry, we don't think that anything will go bad to Bank of Baroda, or let's say any other nationalized bank, big nationalized bank, due to these NPAs and other problems that are going on right now.
Okay.
Uh, sorry to
Yeah,
inter-
another person.
sorry, guys. By long term, you mean 3 years, 5 years?
Yes, 3 5 years at least.
Okay, okay.
I think it will be almost double it for sure because currently it's in depth. It's a good choice for long termers.
Okay. Guys, does
I
anyone of you
personally
have
felt
any
that, I
idea?
mean, will it be? I felt like it's a stock like more like ITC, which will neither go high and neither go neither go low. No.
I think in India, Bank Nifty is the. I think banking is highly rated. I think people are. Indian stock market is completely driven by banking domain, where like in America, IT companies like tech companies. So I think you can't compare ITC with banks. I hope this is my first impression. Maybe.
No, no. I mean, like, no, I didn't mean to compare ITC, but for me, whatever I could see, my understanding was that probably it might not go too high, or yeah.
Again, so
So
Neha, you need to see into the businesses of ITC. So ITC is a lot many business like tobacco. They have big hotels. They have the consumer products as well. So just go and look into their product profile, and you'll be able to understand that what kind of product profile they have and what is the market of this product profile in coming years. If you think that that product profile has a future in India for let's say another 5 10 years, then I would say you go ahead and invest that.
Okay, there was one
But right,
thing which I checked was this. The last as compared to, uh, 1 minute. Where is that chart which I saw for? But maybe my analysis was too random in that
See
case.
if no, go ahead, go ahead.
Where was this hell? I had shared one link for HDFC and Bank of Baroda comparison. I cannot find it.
Maybe you can find in Google much faster.
Yeah, that's right. And also it is
I've
important
just been,
to.
I can just add quickly some few points.
Uh,
I've been going through the Bank of Baroda quarterly reports for the last few months and years. And if you see in the detail, their interest, discount, and advances and bills have gone up. Okay. Almost gone by about from 9,000. Yeah, it's gone up by about 25%, 20%. And between 2018 and end of December 2019. Okay. Their operating income has slightly gone down, uh, but otherwise it is all positive. So I mean, I don't see any much of negative change in their numbers. Even their profit before tax has not changed.
No,
Much.
mhm.
I think their biggest outlier is their NPS. Their NPS has grown a bit in last 1 year. That's primarily because of that the Gitanjali one, the Mehul Choksi one. But again, anyways, the RBI is writing off that specific bad loan. So probably Bank of Baroda will come back again, as I said, that's a public sector bank, and lot of rural Indians have accounts and money in this bank. So I'm pretty sure that the government will not going to have anything happen to at least Bank of Baroda and PNB and these public sector banks which are very large enough. So in a long run, if you are, I mean, I cannot say like for next 6 months or 1 year, but if you are looking from the perspective of a long run, 3, 4 year, 5 years, this Bank of Baroda will definitely going to give you a lot of money if you are going to invest in that.
The
Okay.
question is, would it be a multi-bagger or no?
I think it is not a multi-bagger, but a safe investment that could rise steadily. Now, the question maybe for us to ask this to Nishant would be this, that how to identify the multi-bagger stocks. So let us go down and study below. Hey, interrupt me. I mean, I'm also studying along with you, so don't think
Yeah,
so much.
guys, if you can help me with this couple of terms over here, PCR, TWO, and capital adequacy ratio, it would be helpful for me.
Okay.
I mean, if you know.
Actually, we also know. At least I know only the one which we got from the Investopedia. Uh,
Oh, okay. Okay. Do you know about PCR or TWO?
It is the provisional coverage ratio, and what I understand is that it has got like it is against certain bad loans.
Okay. So PCR is provision coverage ratio. That's another. What is this
Yeah, so it's the
TWO?
provisioning which you do with the mostly for the PSUs.
so
Now,
can you repeat what you said? Just
it means the provision coverage ratio. So
okay.
all the bad loans that have been generated,
Okay.
so the which will not get easily reimbursed.
Mhm.
I mean, there is like one is NPA. So the NPA is like, now this is fallen out of your balance sheet. But there are certain loans that will be like, that will be provision. So you will, for example, if the company, if you are in debt, you still make certain provisions so that it can be covered. For example, I remember for Choksi, I think at certain point he had a loan and he got one more loan, so he was provisioned once again. And what else had you asked? Capital adequacy ratio. Exactly, I do not know this one. What I know about was actually that it is carried out. It is again. It is also that for covering. Now this one is like more that you are not getting any bank loan from from the Reserve Bank.
Yeah.
You are not gaining anything else from the Reserve Bank. But I think it's better if you Google it out.
Yeah. Okay. Sure. No worries. So we can Google it out. Okay.
Okay. Uh, yeah, so the next, I'll quickly read out all of them and then we can go to the next slide. Operating profit of the of December 2019 increased from
Hey Neha,
INR.
sorry to interrupt. I think we covered this up right in our last to last session. One, two,
Yes,
three,
we did.
four.
So I go to the next one.
Yeah, that's. I think it should be okay. Otherwise,
Yeah, we will
just
not end up. Okay.
yeah. Okay.
So here was this that what I the last is what to bring out the CASA ratio, we'll have to see the deposits and the assets. So one part was the that we have to compare that how many that if their assets are better than the deposit, if your assets are are higher than your liabilities. So here they are good, I believe. Now, in terms of the operating profit, I don't know what is the standard operating profit at which a company should perform. But it seems 8.5 is not too bad. And then this was the last thing which we had discussed was the NPAs. I mean, in HDFC Bank.
I think this should be more towards zero. That would be better. If more, it's good gross NPA. I think it's more
Mm,
positive. It would be good towards.
yeah.
I 13.3 is too much
But
for a
what
bank.
you see is this net MPA.
It should be 3 is the best score. If I remember, 3 is -3 is the
No,
best.
no, that figure that is minus 13.3 is not the percentage of the NPA. That is the change
Yeah.
from previous Q3 of 2019. So that's like it has gone down, if I'm not wrong, 13% gone down. But that's strange. But it's what it is. So net NPA you can see on the right hand side, which is the ratio, which stands at 4%. This should not be more than 3%. I mean, as per Nishant, I mean 3% is still okay, but it says 4%, which is on the higher side. And the gross NPA, which is 10.43%, he said that it can be around 5 or 6. Then it should be okay. But I think they are on the higher side.
I
And
think
And
even
again,
cost to income ratio, they are on a higher side.
yeah, what this cost to income ratio means? What is the cost
Means what
versus
the
what is the
recovery
income?
which they
Okay,
are getting out of it. I mean, the expense which they make on their offices, employees, etc. Whatever is the cost for the bank.
okay, right.
this is to run the
Yeah.
business, banking business. I think.
Yeah, run the business.
But you know what is the best score for this one? Cost income ratio. It's more or less would be better, or
The
I think
cost to it,
cost
the
income.
cost should be less. I mean,
Mhm.
should be less with
Yep.
the
I
ratio
don't
which
know
is.
what is the best score. Well, maybe 10%. I don't know what is the best score to run the bank.
We have to check
Probably
it.
this is probably this is the question we can ask with from Nishant, right? Probably he will be looking out for the questions. We can jot down these questions for him.
Yeah, I think it's not a comparable thing. So, but we will, so one sheet on which we would have maximum of discussion would be probably this one. So let's go down. I think none of us knows much better about the capital adequacy ratio and the standalone and the consolidated ones. So let's go down. So next are these.
Okay, so it talks about the quarter-on-quarter basis, the Q2 and Q3 of 2019. Total business deposits, okay, and then total advances, domestic CASA ratio.
So this CASA ratio, which I am looking on internet, is for HDFC, for example, it is 52, and for SBI, it is 43.
It means that 43% money is in the CA or SA, right? Current account or saving accounts.
Yep.
Yeah,
Is it good or bad? I mean, I
it's
don't know.
good.
I think
It's,
it's more.
I mean, the higher it is, the better it is.
Yeah, the higher it is, the better it is.
But it is
Like,
like it's kind of a supporting statement. I don't see it as the
uh,
most important
I
point.
think I'm not sure, but that would.
I think this
Yeah, no.
is
Okay.
not irrelevant. I think because based on my understanding, CASA ratio is like if you have assumed you have the 10 products in the bank, like maybe student loan or credit, just a credit cards, savings, all these products. So out of this, current account and savings account are the most revenue for the banks. So
I mean, it gives a lot of liquidity for the bank, no?
yeah, exactly. So that's the reason they will highlight this point. That is very important for bank. The more you have CASA ratio, that will be
If I
cash.
remember this, he said that CASA means like that, for example, you have a lot of employees who have their account in a bank.
Yeah, exactly.
Yeah, but and also Nishant, what I remember, he mentioned that the in current account and saving accounts, the cost is less, while in the fixed deposit, the cost is more for the bank
See,
because
the
the
thing is
current
that
account.
the bank would at the end pay less to borrow money because when you put the
Yeah,
money in the bank, it has that cash.
Yeah.
So
and
that
also
so it'll for the bank it'll cost less to borrow the money and lend it.
yeah, because in current account there is I think 0% interest, and in saving accounts it's very less. I think 2 or 3% only. So
No, but
that's
they
why the
wouldn't need to
cost.
borrow the money from any other intermediary bank. Because
But
what
why?
banks do is they borrow money from other banks, bigger banks, and then they lend it to somebody else, and the interest difference is what money they make.
Yeah,
So the higher
generally
the
with
CASA ratio means that the more liquidity they have. So for them, access to cash is nil.
Yeah, I mean, generally in my perspective, they don't borrow it from other banks. They borrow either from the RBI, or they do the loan based on the fixed deposit done by the customers. That's what my understanding. I don't think they borrow from the other banks.
They borrow from other banks.
Okay.
But
They
I
borrow.
don't think it was related to CASA.
Yeah.
No, it's
Uh,
related to
okay.
CASA, but what I'm saying is why a high CASA ratio is good.
Okay. Well, I still don't agree to that, but maybe we can
I'll
check
just
with this
maybe
part.
we can check with Nisha.
Yes, yes, we can check. I think your net NPA ratio is here, Ranjit,
Yeah.
3.91.
Yeah, that was in the Q2 of 2019, 3.91,
Yeah,
which rose to
so it's
4.05.
increasing. It seems increasing, which is not a good sign.
I think next
Yeah,
month
and
it's gonna increase more. Next quarter.
yeah, this quarter and next quarter it will going to increase more because of this coronavirus thing. it will going to increase for sure more.
Now, these ones we have not discussed them, slippage ratio or cost to income ratio. So this one is, for me, it is high.
Yeah,
Yield on advances, it should be probably higher, but I do not know. I think slippage ratio should be like the credit which they are giving because it's based on credit cost. So
I'm really not sure on the slippage ratio.
I think these terminologies are used in different banks is different. I think these are very tricky.
yes, I okay. So let's check on this. These ones, I think we know. And this PCR is what?
It's again provisioning coverage
Ah,
ratio, right? That's what you
yeah,
say.
provision.
I think I got to
I
know
don't know.
Google search. Sorry, slipping ratio is the rate at which a good loans are turning into bad. The credit cost of the amount bank accepts to lose the due to credit risk. So basically, this score tells us how many good loans are turning into bad. So yeah, next quarter it will be more increasing again.
Exactly. So
Slipping.
I think in this slide, let's focus on what is about the CASA, because we have to also drive a little bit with Nishant. Otherwise, we will be discussing this document for the next two classes.
Sorry, quick question. The slipping ratio, what is the average or a good ratio? The high, the lower
Now,
it should be, right?
ideally, it should be
It's
But
that
what is any average or any industry average or something like that?
I think it's a very tricky to answer to come up with a standard. I think it's a very difficult because you should compare with the peers. I would say if you check with the other
Yeah,
peers,
that is true. That is true. So, okay, yeah. Agree.
yeah. Yeah. So now this one is much more detailed than the one which we studied in HDFC. So again, the total business, the deposits, CASA deposits, saving deposits, advances. So all we can
Oh,
see is probably that the CASA deposits are increasing, which is a good sign. The saving deposits are consistent.
no, year on year basis, they said that it has increased 8%, right?
Yeah,
That's a good increase, I would say.
yeah. So with that, this one CASA is consistent almost. I mean, it's increasing but more or less at 1%, 1.5%. So it seems like a consistent bank in that way. Second thing, ये क्या है? What's the difference?
It's same, I think. And there's no difference. Or there is.
There is some difference. Domestic advances.
Okay, it says the
This one
first
is
one
net
says
and this one
terminal
is
figures.
gross. This one
The
is
first
net
one
and
says,
another one is gross. Yeah.
yeah, gross. Okay.
Okay. So overall, it's consistent bank in that way. So
Do you
yeah.
know what is this terminal figure and average figures? On the left chart on the top it says terminal figure, and on the right side at top it says average figures.
I
I
don't
I
know.
Nope.
took them the past two slides. I think this data should be. Can you go back?
Yeah, the same thing in the past two slides as well. This one is the average figures on the top right side. If you see, it says average figures, and then on the above slide it says terminal figures. Neha, on the previous two slides.
Yeah, yeah,
Yeah, here the
on,
business performance. Yeah,
yeah, yeah.
here on the top and right hand side you say it says terminal figures, and if you go to the slide number 2 of 2 for the business performance, it says average figures. So we need to talk
I
about
think
what
it
these
means the net and the gross.
probably, yeah.
Because that's the difference which is coming. Because here then you have everything which is changing with the net figures and then with the gross figures.
I don't feel that
Comparison.
why they need to analyze it.
Average business data is based on the daily averages of respective
Okay.
sorry averages. कहाँ गया ये? Average figures. What is written here? Sorry. I did something to my. It's the same. I do not know exactly.
Okay, let's just read one of it. What it says. Okay, domestic CASA, global CASA, deposits from. Okay, it's the same thing that we had saw in the business performance. It's just in the graphical format. I think that's it.
Yeah, for me, it seems the consistent graph overall.
I
Yeah, it
think
is increasing.
it is used to
It says.
check the volatility, how it is differing. So basically, in our case, it has a consistency. But if some volatile happens, the graph looks bit different.
Ranjit, can you explain a bit more on that? What do you mean by volatility here? In
Here,
this
here they took some time frame in the graph one, and the other one is on daily basis they checked.
Could be.
That's the reason here it's a bad example, I would say, because we don't see the difference. If you took maybe some quarter or some period, and it could be differ, I would say. Maybe some bonus came to most of the accounts, that then it's changed it, or many guys lose in some quarter, then it's changed. Some particular day can influence. I think that's the one. That's the reason terminal and average figures. Terminal is for some particular time frame, but average is on. It's like an everyday auditing kind of thing. There's a difference between terminal and average for sure.
It could be like, okay, for example, in a day, you are taking the highest figures, and then the second one is like the average of the day. So it could be like that.
Okay.
So the cost of deposits. So the cost of deposits has increased from.
No, it decreased
But I don't know
from.
what does it mean that the cost of deposits for the bank, right? I mean, it is like a cost to the bank.
Yeah, that's right. I think whenever a deposit occurs, bank has to pay some sort of interest to their depositors, right? So I think that is what it is. That the probably I'm not sure whether these are average numbers or what. It should be either ideally be the average numbers. So probably in
It
December
has come
2018.
from above, cost of deposits.
No,
The
it's not
total
there.
deposits and all this, what they are talking about. They
Yeah.
are
So I
showing it
think
in the percentage terms.
yeah, so probably that the average interest rate which they gave on their deposit on their total deposits is 5.25% in December 2019 for the domestic ones. I think that's what it means.
Yeah, could be. Okay. So share in the gross deposit credit, share in the gross deposit domestic credit. So I think this one was basically discussing that uh, the best is that you have, I mean, if you have the corporate share very, very high, that is a little kind of risky. So here what we see is at least that the retail, what is MSME? I do not know. The small businessman, right?
Uh,
Mid-market.
can you Google it quickly?
I think it is all the small businessmen which is there, not the large corporate houses.
I think it's a medium small scale industry.
Small scale business. Yeah, medium and small scale businesses. So most of it is retail, as we see that it is. I mean, like if we account for rest of these, we see that it is almost 50% of the domestic market is retail market. But I mean, I do not know, like for example, agriculture, I think these loans you cannot rely on. Then retail, yes. I think for small scale businesses, probably yes. So I don't know
Probably
how
we
they
need to
account
understand.
for,
Yeah,
because what
we
is,
probably we need to understand that whether the agricultural loan considered to be this safe loan or the risky loan, because we know that in India the situation for farmers are very bad. So
yeah,
probably Nishant can tell us whether these agricultural loans are a good thing or a bad thing. I don't know.
yeah. So with the retail loans, I think they are good.
I
At
think
least,
Yeah.
the if we compare with the HDFC, they were having a better percentage for the retail loans, if I'm not wrong.
yes, because their presence is more urban.
Yeah.
Is anyone know what is this law board? Law board.
Loan against bank owned deposit.
Okay.
Sorry.
Okay, I can see. Okay.
We all are the same. So, so yeah. So let's go on the next one. I think it's not very wise to ponder over it.
Just a small question. Even corporate is not so good or what? Just I'm curious to know. Is corporate is good or not?
What I understood,
Corporate is not that much good because sorry, go ahead, go ahead.
no, you speak. That's not a problem.
No, corporate loan is not that much good because the quantities in the loan value general is very high. So in case a company defaults, the bank will face a higher risk,
Yeah, consider Mehul Choksi in case of
Yeah,
Bank of Baroda.
considering that how many
exactly.
companies are defaulting nowadays, it's not
Especially
good.
now after this period, in case a bank has a lot of exposure to corporate loans, the rate of default will be very high.
Yeah. Is there a way, I mean, probably that question may goes to Nishant. Is there a way can we know about what these 46% loan were given to different corporates, if we can know, I mean, like if whether how much loan has been given to, let's say, a company A or B or
This
C,
is
so that probably
confidential.
we
I think so. This will
we
be.
That
can
I don't think. I mean, that'll be. I don't think the banks would share that
Yeah,
detail because
exactly. It's a
this
confidential
literally who's
information.
the customer, right? They won't share the detail.
And then
But
we will ask how
again, in
to provide.
that in corp, I mean, that is details of the bank that you'll never get that information unless you know somebody who works in the banks in the loan departments. But I mean, since it is a government owned bank, the chances that the government could write off the loans is higher compared to a private bank.
yeah, that's right. So basically for Mehul Choksi, I think RBI is already writing off that bad loan. So I think
Yeah,
Bank of Baroda will going to get benefit out of it.
yeah.
I don't know how can a bank get a benefit if the government is writing off somebody's loan. The
Yeah,
government is filling up the,
not the government, the RBI basically. The
yeah, but
RBI is going to yeah, RBI will going to compensate Bank of Baroda for that money that Bank of Baroda has lost.
okay, well, what I understood was that in any case there is a loss. I mean, it doesn't matter that I mean, like it matters that of course if they get the money from the RBI, but
Yeah, because
there
they
is
would
a
have got.
loss. I mean, there is a cost which is associated with making a case out of it, etc., etc. So the bank
Yeah,
anyhow loses money.
Plus,
So
I don't think they
considering
would
that
get the
these are
entire
big
amount.
amounts, you get a
They might
good
get
money.
only the principal amount.
Yes, and you never get the, you don't get everything. So
Yeah, of
okay,
course, definitely they will going to lose at least some money for sure, but not all
yeah,
of it, I believe.
yes. So okay, so next, I'm sorry, I'm sometimes getting on to the next slide. Uh, Detail credit by segment and percentage growth in retail and home loans.
Can you
Uh,
just zoom out a little bit? I think we should have some legends over here as well, which will talk about what these bars are.
okay.
Yeah, here it is. Okay. So the retail loans, education, auto, and home. So biggest chunk is for the home loans. Then comes the auto, then comes the education, and then no, then comes the other retail, and then comes the education.
Yes, so I mean, home loans are still safer. The auto loans and education or retail loans, other retail loans are more beneficial because the rate of interest is higher.
Now, this is where I disagree. I feel home loans are quite risky
Eh?
because it depends also how the property market reacts. So how the real estate valuation is. If your property values go down, so obviously the people who purchase the property, I mean the value of I mean the building they bought or the apartment they bought, if it goes down, whereas they have bought it at a high price, then they won't be able to even sell it at the price they bought.
Yeah,
Yeah.
but in
Do
generally,
you understand?
yeah. So, but
This
generally,
is
what
this is
happens
what
is,
this is what created the 2008 crash.
Yeah, in
yeah,
US, yes, I
But that
don't think.
was a mortgage. It was not
Yeah, but
against a guarantee. In India,
yeah,
it's
yeah.
against guarantees and insurance.
exactly.
Yeah,
Exactly.
exactly.
That's one thing that it's a secured loan that a bank always keep the paper home and they can sell it off in case of a default. Other thing is that in US, I think it was a different scenario because of the mortgage related thing. Here it's a different scenario, and again the property prices generally, let's say, get tends to drop by 10, 20, or maximum 30%, right? But again, the loan bank give the loan against only 80% of your money, of the overall value. So still they are in a position to sell it off at par rate, if I'm not wrong. Even if the, let's say, the value of the property goes a bit down. On the other hand, these auto loans, since the value of the cars and all these things depreciate, these are somehow a bit of a riskier side.
Yeah, agree.
Okay. And then the percentage growth in the retail and the home loans. So the home loans are decreasing
Small
and
little
retail.
I think education loan is also good business for the banks because that is the interest is too high on the education loan in India.
Yes, the interest is too high, and the other thing is that just after 2 or 3 years,
For
you have to
graduate,
be
they will
repaid.
charge. Yeah,
So, so which makes it a good option.
But is it safe, the education loans?
is it fair? You said. What was your question?
Safe. I
Is
Safe.
it
think it is
safe?
safe.
I think safe.
I think
Some
it
of
is
people
safe. Yeah,
manage to
I've
find.
never heard a lot of defaults because of that.
Okay, let's.
And anyways, if even if there are some defaults, it would be very less amount, because again, there are not big amount or big chunk of money is being given away in these education loans, if I'm not wrong.
I think in thinking in a middle class mentality, I think that people who took the especially education loan, they will be having some kind of energy to fulfill the loan. They don't want to be in that blind factor. So I don't think so. They
Yeah,
are,
that is true. I agree that. I
yeah,
agree with that.
student. Most of the students I know, they will be repaying very quickly after joining the jobs.
They want to clear, the first thing they want to do is clear off the loan first.
Okay. So now the growth in the retail loans and the growth in the home loans. So they are decreasing their home loans and increasing their, but it's not too, I mean, it's probably decreasing, but not really like,
No, I think
it's not an exponential decrease.
no, no, it's not decreasing. Actually, I mean, it's still increasing, but the growth is less. That's what
Yeah.
how I read this.
Yeah.
I mean, still it is increasing, but the rate of increase is less. I mean, in March 2019, it was increasing at 18.96%, but in December 2019, it was increasing at 10.2%. Still, it is increasing, but at a less rate. That's how I read it.
Yeah. So I think that's not overall not a bad sign. That's what we can conclude from this one. So let's go next. The risk profile of, I think here we will get some answers. Um, so the risk profile retail post amalgamation. I don't know how it means 750 plus. I couldn't understand based on amount. I think this value is in crores, but it's not given in that way. I don't know.
What does this mean, actually?
Pata nahi hai, I don't know. I have no clue.
It's they're representing the previous slides legends.
I don't see it.
Go down. I think you're now go down. Previous slide where the pie chart was there. Just above this one.
No, the legends are here says that 760
Yes,
plus
it's below it.
7 to, that's the legend which is being displayed over here. I don't know what
I
it is.
think it is here that is like risk score greater than 735.
uh,
It is called this.
could it be like Sybil score?
Mhm.
Oh yeah, it is a Sybil score. It is Sybil
I
score if I'm
don't
not.
know that what is the score
Credit score.
rating. So it is CRIF rating.
CRIF, I don't know. Sybil, I know that it is the score which tells how much how much reliable a person or a entity
Yeah.
is in paying back the loans.
Yes, it is. I think it is CIBIL rating, which is called CRIF. It
Mhm.
is very high risk pro portfolio as per CRIF stands at 6.95%. Okay. So there is only one.
Very risky is.
Yes. So it's just showing that these many are that risky. Uh, so all of them have a very high risk factor associated. Then CMIR for 1 to 5 for amalgamated equity decreased from 75 to 71 Q on Q, which shows stress in the MSME sector as a whole. Standard exposure in CMR 7 to 10 of the amalgamated entity is approximately 4,500, of which approximately rupees 1,800 crore is in CMR 7. So I am not able to understand it very well.
Yeah,
So
even I
maybe
am
we
not.
can
Probably
discuss.
we can talk it with Nishant. He can explain this to us.
Yeah. Actually, the good idea will be that,
Think, we should not go deeper if we are investing. I think if you check
yes,
pie chart, that's explains what we need because here,
exactly.
by the seeing the pie chart, it will explains that how many risk and how many what's the percentage of risk profiles this bank has. So I think this should give us information. Maybe HDFC has less 1% or 2% maybe. So in that sense, HDFC is good. So that should be enough for us to compare with other banks and buy the shares.
Exactly. I think the best is, I mean,
What
like
can you please
one
repeat?
reason
Can you
with
please
why we
repeat? I
have
didn't
this
get it.
call before Nishant is that we don't emphasize on the points which we don't need to emphasize on. Otherwise, we will
Yeah.
not finish with him. So just a minute, I am also, I will send you a little bit on this. So let's read a little bit on this, and we are just ask him that what is the overall meaning of this slide.
Or maybe we can make a notes somewhere with slide numbers.
Yes, I didn't make it before, but now I'm making. Okay. 16. Okay. So improving the rating profile, I think here what it means is you know what, I think that they picked everything from different slides without any coordination and pulled it in.
Yeah, it is not.
So it doesn't make a lot of sense actually. Rating
It's
distribution of domestic advances above INR. कहाँ है ये? Above INR 5 crore. So I think that I don't know what it means, A and above. Probably A means best.
let's. I don't think so. We are going to make it out. What that does this mean? Because there
Yeah,
is no
exactly.
explanation.
I got just my theory. Maybe this gives us how many guys above 5 crores are in risk factor.
Maybe. Okay, so now capital optimization in corporate book. What is capital optimization?
No.
Okay, so I think none of us knows about it. Let's check on Google if we get anything.
It's optimization of balance between assets and liability.
Okay, so it is again the ratio of asset to liability. But what does
So
it?
the lower it is, the better, right?
I think it should not be lower, it should be higher, the asset.
Higher. Yeah, correct.
Yeah, I think what it means is that it is more or less stable. And I don't know what you mean by exposure ratio now, corporate exposure ratio.
I think capital.
Exposure to what? I don't know. Is it loan exposure or?
Guys, read these lines. I will text you in the chat. Maybe. Please check the chat.
Yeah, this I know. Working capital optimization.
I think these are for risk weighting, for evaluating risk profiles. Okay, we are still on this part. Let's go ahead because none of us knows it properly. So we are going to ask about it.
Yeah.
फिर क्या है industry wise exposure? So they have infrastructure projects, they have so what I see is like these things, power, telecom, some of them are actually PSUs, not telecom, power, for example, road and ports.
This is their investment, right? Or
I think that no, it's not their investment, it's an industry wise exposure, which means that probably these companies are the ones which
Loans.
are which are taking loans from them, retail loans, agriculture loans, like that. The industrial, the sector from which they are getting money from.
Okay, this will be interesting.
Or it could be their investments as well, if they are financing projects.
Yeah, yeah. I mean, that's what that at the
Yeah,
end,
okay, okay,
when they are
yeah, I agree.
financing, they get money out of it, right?
Correct, correct, correct.
So what it means is that, for example, that some of them are, how safe are these sectors, how unsafe these are. That's what all it would mean. So uh, next segment-wise breakup of an NBFC exposure. It is asset financing company, housing finance company.
Non-banking financial company.
Yeah, so they have increased for microfinancing. Substantial increase, almost doubled. NBFC, PSU, I think it's good that it's not increased. Infrastructure company, it has reduced actually. Housing finance, say almost similar, it has decreased. So overall, they have basically increased in microfinancing. Then rating profile, ये क्या है rating profile?
If I remember correctly, Nishant was suggesting the safe one would be gold loans will be also safer once he told, right? If more NBFs, more in the gold loans,
Yeah, yeah.
but these guys, they
But that is a
But I
mix
think
of
they don't have
both of it.
ETFs. Okay, so now, sorry, did I move too fast? Yes. So let's go ahead. Segment-wise breakup and ratings of NBFC exposure. I think more or less it's explaining the distribution. So probably we can broadly discuss it at the later point.
I think these figures are very important for us if you want a current crisis, considering current crisis, so that we can give a priority. What is the not a good investment now? Maybe some sectors severely damaged. We can stay away from such banks which has majority of shares which belongs to such things. Maybe they give the tourism industry, or that's a bad example, but
Hmm.
some industries now currently they are because of COVID, it's it's affected very badly. So based on segment, we can decide whether it's a good choice as of now or considering current situation.
Yeah, okay. So, but we can discuss it next. I mean, like, let's go it because there are like, I think it is 200 pages. We are at 20 pages.
Okay.
With we will never finish otherwise. So, next, yield on advances. It seems increasing. Again, now, what are treasury operations? I think it is more like the cost. Actually, for me, one of the biggest questions would be that, when we are studying, what are like the major factors which we have to keep in, like the takeaway of the whole thing at the end should be that looking at the at the results, at the balance sheet, or whether it is this, we know that these are the things which we should calculate or compare, and these are the things which we should find, we should be very careful of, and also find that if the stock is undervalued or overvalued.
Yeah,
That two
exactly. I think
things,
Yeah.
that is more
because
important.
otherwise we can always, it's like we can
Yeah.
always go in the details, nitty-gritties.
Yeah, so it is really important to understand what is important
Mm.
from the investments perspective, what all important points needs to be understood. like NPAs, balance sheets, profit and loss statement, and whatnot. And then probably with that, we also should be knowing a bit about the other soft aspects as well, like what kind of leadership is. I'm not talking about the PSU or these kind of banks. I'm talking more from the perspective of the private, not private, but yeah, the companies which are not undertaken by the government. Like what kind of leadership these companies are having, specifically, like, if you talk about the Tatas or the Mukesh Ambani, these people are very sound in their running the business knowledge and stuff like that. And so these are high moral people as well. And the other things, I mean, apart from these pure numbers, we should also be focusing on the other soft aspects as well.
Yes. So, but
I mean,
that is a
again, this is
part of
all
what
this.
studies. I mean, like that is a
Yeah,
part like which will keep changing with every changing person.
yeah, but I think that is all from the long term investment perspective. I mean, if there are people who are trading on intraday basis or a very short term basis, I don't think so any of these matters.
Mhm. I think you can go to slide number 33. That is very important. I think net interest margin. That is the deciding factor, so that you will understand how much percentage of margin they have.
Mm.
If it is increasing, it's good. 33.
This is 33, and I am.
Yeah.
Okay, so it's going a little down, actually.
It will go down next days.
Yeah, I think this NIM is pretty much similar to what we saw in the first slide, right?
Mm.
Net interest margin. The first slide where we were reading out the lines from 1 to I think 7 or 8. There it was mentioning the NIM.
Mhm.
Yeah.
In between the slides, whichever they skipped, those are, I don't think so. It's necessary. They are mentioning which are the international banks. We have all those things. Where
Exactly.
they are overseas branches. They are talking about overseas branches.
So, I mean, one is like their operating income, 13%, which is a little relatively high, I think so. The revenue is 9.2. I don't know that how much is the standard growth which would be considered here.
I think 9% growth is a pretty good thing, if I'm not wrong. Again, it needs to be checked upon the targets which were set up by the leadership for the specific quarters. If they are meeting those targets or not, it is also important sometimes to see what was the target set by their leadership and whether they are reaching that target or not.
Actually, I mean, like reading a quarterly report is not exactly generally like, I mean, it could be a good idea, but it's not the real situation.
Sorry, Neha, I couldn't get your point.
I meant to say that sometimes, in the quarterly report, the quarterly targets are not the targeted. I mean, probably in the first quarter you can have a very smaller target to chase on, and they know that the real business happens at the end of the year, for example.
Yeah, that's what I said, that it's important to understand what was the target and whether that target was achieved or not. Because let's say that I could target a 7% growth for the quarter one, but I could target 15% growth for the quarter three because my business is such like that the it picks up in the quarter three, for an
Yeah,
example.
probably. Okay, so now I think they are just saying that they are also getting certain their earnings from the commissions, which is good. 15% from the charges, 39%. So,
This will be more for ICC Bank and other folks who are giving very good demat services.
Yes. So I think primarily it's not their business, but they are not doing too bad. That's I think Bank of Baroda is more famous, not like here, but it is famous probably in UAE and like that.
Okay.
Oh, so the employee cost, la 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 la, all these costs that are there, the expenditure. So this is actually, it looks high. I don't know if it really is. But it has been constant actually. They were not able to reduce. In fact, it kept on increasing their
But
operating
again,
expenses.
Neha, it depends on if the bank is increasing, if it's growing, definitely the operating cost will also grows up, right? The more important aspect from my perspective is to see what is the net income they are making after deducting these operating expenses. If that is growing, I think that is a good sign. Because if you are growing, if you are in a growing organization, if you are expanding your business,
Oh, look at
definitely
the
your operating
minus
cost
four.
will be increasing.
It's
I didn't
1,000
see a lot of sign of growing of their expansion, market expansion, but
in quarter.
yeah, you're right on that.
Yeah, in quarter 3 they are in negative.
So, again, total provisions,
Again,
operating profit.
yeah.
So the write-off provision for NPA and bad write-off, bad debt write-off, it's increasing. Standard advances, provisioning, they are more in negative here. So the net profit is
Yeah, actually, their provisions are so high because of the bad
yeah,
loans,
nice.
and I think that out of those 6,000 of the NPAs, major chunk was for the Choksi, if I'm not wrong.
I don't know, yeah, but ठीक है. I mean, like it was very interesting figure.
There is also Vijay Mallya.
Yeah, there
हम लोग
are.
स्टडी करते रहेंगे ये बैलेंस शीट और वो कहाँ से कहाँ पहुंचेंगे.
Actually, the problem with these public sector banks is that they give loans to the people whosoever the government says to. अगर आज मेरी गवर्नमेंट है और मैं बोलता हूँ अपने बैंक को, बैंक ऑफ बड़ौदा पीएनबी को मेहुल चोकसी को या विजय माल्या को लोन दे दो, these guys cannot do anything. They have to grant these loans,
Yeah.
and that's where the whole problem started to appear because of the corruption in the government. These public sector banks or the government banks take a lot of hit. But anyways, we can move forward.
So closing balance is, I don't know how this became positive.
So it's mentioned in at the top, right? The opening balance is this, additions, out of which fresh slippages, reduction, blah blah blah.
I think from one quarter to another quarter it's a sequential, so it's increasing.
No. It's not the sequential thing. It's only for that specific quarter.
But
So
overall, I mean, see, the slippage ratio has increased.
yeah, that's what.
Credit cost has also overall, it was 8.13. Oh, it's funny. I mean, like some figures, it's very amazing. From 2.64, it goes to, maybe this was the period of Mehul Choksi. So yeah, the more the down you go, the figures are like everything which is fishy is down there. So uh, yeah, I think again it is for NPOs, NPAs. I think we can skip this part and go next. Otherwise, we will not finish. So contribution to the NPAs. So that's what they are
I think
showing. So it's diverse. distribution.
It's a good slide to review who all are defaulting on the loans. So it's, yeah, as we know, the corporate is the biggest culprit, and then the MSME is also the second largest
Yeah,
chunk,
what?
and then the agriculture, then retail, and then finally others.
Yeah, I don't know what is NCLT. It's something nationalized.
Yeah, I think probably we might not need to know everything.
Yeah.
Whole company law tribunal.
I mean, like, the one good thing could be like, otherwise, if we'll get Nishant stuck, we will not. So we have to say, yes, we know it.
No, that
So
is not the way you
otherwise, it
learn.
will take a lot of time. And we have a big number. Very difficult otherwise.
I think even though we go through everything, we'll forget for sure. I can't remember all those things.
Yeah, I think probably you have to, or we have to do similar kind of balance
Okay.
sheets and think for multiple times.
Yeah, exactly.
Yeah.
If you are accounting student, I think we will be able to remember all this.
Anyone from accounting background or non-technical background here?
I am from pure technical guys, so I think everyone is on engineers here. If
I mean, no, I have been doing accounting quite a lot, but not related to, I mean, not, how do I say? Uh,
So I think
I have not been exposed to, because there are also here quite a few terms that are specific to the industry and everything.
banking industry, yes. What is capital adequacy? It's worth knowing.
Mhm.
So the minimum reserves of the capital which a bank or other financial institution must have available. So that has been growing. So I see that as a good sign overall. So on December was 13.98%. So I think it is good. But then I wouldn't comment too much on it. Let's move to another slide. I'm sorry I'm rushing. Otherwise, we will not finish. The shareholding pattern on December. Here, okay, so it's completely owned by government. So 75% or 65% is almost government of India. 71, okay. So fine, that's it. The share capital is 924 on December.
What is share capital?
The share value, right? No, okay. Not the share capital. That's what no, the share capital should be.
No, the number of shares that is, no, the total share capital, no, the
it's issue of
capital that they have issued, yeah, they have raised through the share market.
Yeah, the number of
But but,
issues that they have. It comes
no,
from
but
the
the
issue
how
of shares.
but how does this helpful? I mean, with this number, we cannot say that the market cap of Bank of Baroda is only 924 crores.
we can talk. We can mention to Nishant about this one. It's interesting actually. If I understand correctly, your question is we can't really rely on the share market price or whatever. So how does this calculated?
So from internet it is that share capital is the long-term source of finance. The shareholder obtains a return on this investment through dividends, payment out of profits, and increases the value of the company, which is eventually sold. So it is good for the dividend, whatever it means overall. And because it is a government-owned company, Uh, what I understood was that it's not paying a lot of dividend actually. I don't know where I read it. And then again, it's not something which will be sold. So I don't know. And maybe I have a question that, for example, I don't remember. There were the banks. Uh, some of the banks got combined. I think SBI banks. Some of the banks got combined with SBI.
Yeah.
And how do such decisions help or devastate a bank?
I think Bank of Baroda is the one who got the benefit from this actually, because Vijaya Bank from Karnataka, this bank was pretty good. If you see the logo here, go up, short, yeah, yeah, you can see the two banks, Dena Bank and also Vijaya Bank. They were the profitable banks. They combined with Bank of Baroda because in order to balance the balance sheet with the bad loans.
Okay. So fine. And then the integration, is it? I cannot understand it. So I mean, like
Corporate and what does this mean?
EBB,
Corporate and common.
I think this is more the information on that how they are. What's how they are diversifying or their network, the on-ground situation for the bank.
I think
So
yes.
more on their operations, their operational activities, how they are doing it.
I think this integration is probably the amalgamation of the I think 4 or 6 banks. Is it about that?
I think it is about many things, not one thing. Like all small things which can happen for integration. The changing of processes, changing of any kind of payment system harmonization, like what
Yeah,
exactly they are doing to make their processes or their bank better.
Mhm.
That's all it
I think
means.
yeah, I think it is about the amalgamation of the various banks, how they are going to bring all the banks together on a common platform of IT infrastructure as well as the HR as well. That's what I read just above there.
Yeah. So I'm sorry, I'm again switching. So strength and initiatives. I think one point, the capital adequacy ratio, it's considered a strength. Uh, they have a strong domestic presence. They have a strong retail franchise. These all things which we had already studied. So overall, I think we have understood what makes this a stable bank. What we all need to understand is that whether it is like undervalued or valued at a good price is something which we need to understand. Then again, I think all these a text we all can read, right? So let's jump again.
I think one there was a very important point on the last slide. In the last line, established on 20th of July 1908, it's a 112-year-old bank with 71% stake by the government of India. That's what make it more reliable thing.
I don't know if it makes it more reliable or more.
That's the key strength. That's the reason it's mentioned in key strength slide.
Yeah, yeah. It is a very positive thing.
Yeah, but it's interesting to know about it that it was established in 1908 before independence. Uh, Okay, so in Delhi itself, it is 463 with 3 branches. Wow. I think it is not branches, maybe ATMs. So now it has got a very good pan-India presence and international presence as well. Oh, in Europe, no, not too much. You see, in UAE, yes. In Africa, it's high.
Why they are operating in so many African countries?
Yeah, because Indian
This is
government has a
historic.
lot of stakes in Africa, and
This
also.
is historic. This is historic. The reason is because Bank of Baroda, when it was created in 1900s beginning, after it was ruled by the Maharaja of Baroda. And during that time, the Maharaja of Baroda decided to open a lot of branches in Africa to serve the Gujarati community. So they opened their branch in Dar es Salaam, in Nairobi, and in other countries in Africa, and that remained.
Okay.
And after that, Bank of Baroda opened again some other few other branches in Africa for the mining community because
Hmm,
there are a lot of mines in Africa
could be.
and lot of diamond mines. And there are some diamond dealers who operate a lot from there who then send the stones to polish in India,
Okay,
in
that's
Surat. So
interesting.
that is why they also opened a branch in Antwerp in Brussels that
Uh,
is purely to serve the all the diamond polishing companies that are based in Surat. More than 90% of the global diamonds are polished in Surat, but the trading happens in Antwerp.
Okay.
So that is why they have is to serve that community.
hmm,
And the
good one.
many Gujaratis that are in Africa, all the Kenyan Gujaratis, and there's a very very big community. So it's quite historic ties.
That's an interesting piece of information. What is Gift City?
Gift, where is that?
IBU Gift City.
It's a,
Must be some development like
I
an
think
industrial development, a new area or something like that.
some, something like a fintech or some fin city, something like that. In Bangalore also we have some city called fin
Yeah, like you have these. I mean,
tech park. Tech
new
park.
extensions of cities, tech parks, something like
Okay.
that.
Like we have this Tech City near the airport of Delhi.
Exactly.
Okay. Uh, so digital network, all this, I think it's new issuance and spends. I think that's an interesting one. So the spends are increasing, the issuance of card is increasing. Just here it decreased a little,
I
not
think
too
more
much.
digitalization means cost is cutting, so that's the reason they are showcasing all those things.
Mm,
More digitalization means it will reduce the task of call center guys and also branches, so it will reduce the cost.
yeah. So,
Social media.
okay. So I think overall, it's like, it is investing. This is what it is showing, that it is investing on digitalization and transformation, digital transformation. And so for all branches at Gift City, blah, blah, blah. So they are like, improving their operations overall, moving to shared services, consolidated finances. So, I mean, they show that 35% is from here, then insurance company, 44. We have to understand that how this kind of distribution works basically. Then capital, I think this is the balance and liabilities. This is, sorry, balance sheet.
Yes, that's the benefit.
That's it. And maybe
I
we should
think
have some
to this
ratios,
balance sheet
etc.
actually explains us whether we should go with this.
Yeah.
I think page 66 is the one which will decide
Yeah.
balance.
Let me write this page as well.
Mhm.
6. Okay. Then I don't know if you want to see the photographs. Khatam, finish. So I think could be interesting. I believe we could finish with this one. Uh, so let's next in the next session, let's all try to focus on the points which we discussed. That how to really evaluate this company and evaluate it against the
HDFC.
any other competition or whatever, or say private sector bank or like that. So with that, I think we can finish the banking part of it. And let's try
Actually,
to.
what would be good to do is if we could do some kind of similar activity with different kind of companies every week or so, and then we can ask some questions quickly to Nishant or even just post the questions so that we can get a kind of a different type of reports and what indicators to see for different industries and type of companies.
Yeah, I mean, I had studied on this one on the bank. So the first, I mean, at like if you really see the indicators, the industry indicators are the ones which are there on the first page overall. These ones
Highlights.
overall. The question which is more is like, okay, if we have to calculate like now against these indicators how we are comparing any other company. So that's what is actually important. And the third is like there are these actually I was supposed to send you all the ratios which were there, like the financial ratio, the solvency ratio, blah blah blah. But then actually that then all these things are already there on internet. So I was wondering that if I just put this information, it's not making a lot of sense. So we have to understand that which are the real ratios which are seen when you are evaluating a company. For example, banking sector. So which are the
Yeah,
five or
I
six
agree.
important ratio we are going to compare. Otherwise, I mean, there's no point that we keep. I give you like one text full of ratios because even I wasn't reading them, so I don't think so anybody would read again. So okay,
Hello, hey guys, can you hear me?
yes.
Okay, I was saying that it would be also good if you can talk about what kind of different strategies people are following, like from the long-term perspective or from the short-term perspective, or if there is anybody who is doing the intraday trading. So it would be helpful.
So I mean,
What is your aim?
so
What
the
is your
thing
aim?
is that when Nishant is explaining, he is explaining for the long term.
That's right.
The intraday, the intraday, short term, etc., is something which we are taking after the lesson with Nishant.
Okay.
So I mean, like one of us who is like, for example, Ranjit is investing a lot short term. So every day somebody is discussing something.
No,
So
actually, I am not investing a lot, but I have some money to play around a bit for sure. But my idea is to for something like a
Yeah,
mid.
but
I don't want for 12,
you are looking at, yeah, you are looking also more at midterm as per my understanding, around 2, 3 years.
yeah, midterm would be the best answer for me. I think
Yeah.
our recession is
Actually, midterm is good because right now the markets are so volatile that short term is not even worth considering.
Exactly.
So what do you mean? I mean, like
If you
short term,
want to, if you
what would
want
you
to
call
invest
short
in,
term and what would
if
you
you
call
want to,
midterm?
No,
if you
short
want to invest in short term, there is one asset that will do very well is gold, physical gold. That is the best asset you want to buy right now.
But I think the gold is pretty high rate. It's already 46,000.
Yeah, but
It's
it will still keep going up, especially now, at least for the
uh
next few.
yeah, but
But in the
buying,
physical gold, you have to pay
yes.
taxes also, right?
Even in stocks, if you when you get your dividends, you would pay tax on that as well. But this what the good investment managers right now at this moment what they're doing is they're buying gold.